Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Important day. A lot of headlines we had to digest today. First of all, Trump's reciprocal tariffs came into effect. 26% on India, 104% on China, and the trade tensions between China and US have only escalated. But if you compare our markets to the globe, we've done fairly well, given the fact that we've managed to hold on to that 22,400 mark. 0.5% cut on our headline indices compares very well if you see what's happened across Asia, even for European markets for that matter. European markets are trading lower by almost 3%. Asian markets saw deep cuts, the likes of Nikkei. Nikkei was down somewhere around 4%. You also had Taiwanese market ending lower by 4%, although China and Hang Seng were in the positive. But even the US futures came off lows, and I'll tell you why. But let's first take a look at the markets. We also had to digest the RBI policy outcome, 25 basis point rate cut, as was expected by the market, and the stance has also changed to accommodative from neutral. But broader markets for that matter also recovered today. The mid-cap index was down somewhere around 0.5%, but at one point in time it was down over 1%. So we did recover from the opening lows. The advanced decline ratio was skewed in favor of losers, 1:2. That was the NSE advanced decline ratio. But nothing really to complain about, because we've managed to show resilience today as well. Ever since the tariff was announced, we've seen sharp cuts across markets like Hang Seng, which by the way tumbled 13% since last Thursday. But in the face of that, our markets have done pretty well, and even today they managed to show resilience. In terms of sectors, today IT was the big laggard. Jefferies has downgraded some stocks, cut target price pretty sharply from anywhere between 5 to 37%. So IT was under pressure. Remember, even TCS reports numbers tomorrow. We'll talk about the expectations as well later on in the show. PSU banks as a pocket was down somewhere around 2.5%. Metals also felt the heat as reciprocal tariffs came into effect. Of course, 104% reciprocal tariff on China. But what was looking extremely resilient today was the FMCG pack. That was the sole sectoral gainer. In fact, almost a 2% uptick coming in there. SkyMet's monsoon prediction is pretty good. They expect normal monsoon, absence of El Nino effect, which in turn bodes well for FMCG, which is why the sector was kind of holding out pretty smartly today. As I was mentioning at the start, European stocks dropped somewhere around 3%. China, meanwhile, has come out with a white paper on US trade. Post that, we saw US futures come off lows. While the white paper says it's normal for China and US to have differences and frictions, of course, the white paper also points out that China and US have different economic systems and stages of development, which might lead to differences and frictions in the economic and trade cooperation. But it has added that it's important to respect each other's interests and concerns and work together to develop appropriate solutions through communication and consultation. So basically, the willingness to have a dialogue when it comes to trade and economy, that's something that led the US futures to cut some of the losses. Of course, we are still digesting all the headlines because China is resolute. It's saying that it will fight tooth and nail at the same time. So yes, the headlines keep rolling in, and we will of course see how things really pan out on that front. But domestically, RBI policy outcome was as per expectations, 25 basis point rate cut. Now the interest rate or repo rate stands at 6% from 6.25%. Policy stance has been changed to accommodative from neutral. The FY26 real GDP growth projection has been cut to 6.5% from 6.7%. Which is much better than what other economists are expecting, or what other economists are forecasting for FY26. Some of the economists I spoke to look at or project growth to be somewhere around 6% or just a shade above 6%. In that sense, 6.5%, that's a positive, so to say. CPI inflation forecast has been cut to 4% from 4.2%. But one pocket that was in focus ahead of TCS numbers was the entire IT pack. That index lost somewhere around 2% or thereabouts, although yesterday we saw IT and pharma gaining today. Of course, those gains really fizzled out. For pharma, those gains fizzled out because Trump has once again said that he will be imposing substantial tariffs on the pharma sector. So because of that, the pharma sector was also down 2%. But for IT in particular, Jefferies has come out with a report, a pretty bearish report on the IT sector. It has cut the target price on both large cap and mid cap names by anywhere between 5 to 37%. That's the extent of target cuts that has come in for some of these IT names, and even for companies like Coforge, Persistent, which the street was really optimistic about. But here as well, target prices have been cut pretty steeply by Jefferies. Jefferies, in fact, prefers stocks with higher growth visibility and limited de-rating risks. It has downgraded Wipro to underperform from hold due to its high discretionary exposure. It has also downgraded TCS, LTI Mindtree, Emphasis to hold. In fact, it has a buy rating for Infosys, Coforge and Sagility. Now, Infosys has growth visibility according to Jefferies, which is why it has a buy rating on this particular stock. For Sagility, 100% revenue comes from the US healthcare industry. But remember, even pharma will be subject to tariff now as per Trump. Hasn't really happened yet, but could happen. But still, Jefferies has maintained a buy rating on Sagility. For companies, for Infosys in particular, target price has been cut relatively, lesser than the other names, 7.5% cut in the target price. For HCL Tech, the target price is now at 1520. It has been reduced by 20%. For TCS, the target price has been cut by 27% to 3,300 rupees. Now, I think it is to do with lack of growth visibility when it comes to TCS, which is why the target price has been slashed by 27%. For Wipro, target price is at 210, 32% cut, and for Tech Mahindra, the target price has been cut by 25% to 1140 by Jefferies. If you look at some of the other names like LTI Mindtree, I think here you've seen the largest target cut by Jefferies. It has cut target price by 37% to 4,170 rupees. For Emphasis as well, 29% target cut. For Coforge, the target price has been cut by 24% to 7,860 or thereabouts. Particularly for Wipro, for the constant currency revenue growth for FY26 and FY27, even that has been slashed. For FY26, Jefferies earlier saw a 2.9% uptick in FY26 constant currency revenue growth, but now it has brought it down to negative 0.5%. For FY27, its earlier estimate for constant currency revenue growth was 4.8% growth, but now it has been slashed to 1.7%. Now, for Wipro, Jefferies says that EPS growth could be of somewhere around 2.2% for FY25 to FY27. It has assigned a price to earnings of 16 times for Wipro vis-a-vis 10-year average of 17.4 times. Now, the reason for downgrade is its high exposure to discretionary demand, which of course is expected to take a hit in light of tariffs and the heightened inflation in the US, which is why the recovery that most of the managements were betting on, and if you look at the commentary from last quarter, most of the managements of top tier IT names had indicated that there were early signs of recovery in discretionary demand, but now that comes under threat, and which is why Wipro having the most impact of discretionary demand environment, which is why the downgrade coming in for Wipro. But aside of that, if you look at TCS, let's talk about that because numbers come out tomorrow. Remember, it is a market holiday tomorrow, but numbers for TCS will be, coming out tomorrow. If you look at the expectations, modest growth expected amid seasonal weakness. Sequential revenue is expected to decline due to seasonal factors like fewer billing days, softer demand and project delays as well. Now, you can expect a flat constant currency growth. In fact, also the reduction in BSNL related revenues will impact top line growth on a quarter-on-quarter basis. Ex BSNL, the growth is likely to be up by 1% or thereabouts. Now, BFSI vertical is expected to drive growth going forward, but internal cost pressures from talent-related expenses will continue, and they are likely to offset currency tailwinds. If you talk about deal wins, they are expected to remain steady between $10 to $11 billion, but large deal closures are likely to be subdued. Cost optimization will remain a top priority for the company, and some of the things that one really needs to watch out for are the calendar year 2025 client budgets, whether they will be scaled back in light of the tariff turmoil, also the pricing trends, project delays. These are some of the factors to watch out for. Also, corporate behavior amid macro uncertainty induced by Trump tariffs. If there are any impact on tech spends, budgets, and if decision, and how it will really impact decision making. Remember last quarter, TCS CEO spoke about early signs of revival in discretionary spending in some verticals. Now, will the company hold on to that commentary that calendar year 2025 will be better than 2024? When it comes to international markets, so that's something that we'll be watching out for from the commentary from the TCS management. Now, investors will also track discretionary spend recovery beyond BFSI and the impact on generative AI-led automation on pricing as well as volumes. Just taking you through the CNBC TV18 poll, it expects the dollar revenue for the fourth quarter, to edge lower by 0.8% on a quarter-on-quarter basis. Profits, however, are seen up 1.3%, that also on a quarter-on-quarter basis. EBIT margins are seen improving 30 basis points to 24.8% vis-a-vis 24.5% on a quarter-on-quarter basis. So overall, IT stocks have come under fair bit of pressure. If you look at TCS, I think it has shaved off quite a bit, on a YTD basis, 17% if I'm not mistaken. So yes, IT stocks have been under pressure. Most of the experts also point out that valuations may be comfortable, but given the tariff situation, we'll have to see which way things really head from here. But another pocket that was in focus today, shares of gold financiers like Muthoot Finance, IIFL Finance, Manappuram Finance, all of these stocks saw a knee-jerk reaction, when they, mistook or misread RBI governor's commentary when he indicated that there could be some regulations in terms of gold loans. But later on, the governor clarified that he didn't mention tightening of gold loan norms. Earlier the governor had said that the central bank will soon issue comprehensive guidelines on loans against gold. But there are some regulations or some bit of norms may be expected, but nothing as of now. But just to put things into perspective, gold loans have seen an explosive rise. As of January 2025, outstanding gold loans stood at a massive 1.7 lakh crore rupees on a year-on-year basis, which is a surge of nearly 77%. Now, with gold prices climbing sharply, the segment of lending has grown just as fast, prompting the need for tighter oversight. Now, currently, loans taken against gold jewelry or ornaments, whether for daily consumption or to support small businesses, are governed by different rules depending on the lender. Now, the RBI now aims to bring more consistency across all regulated entities such as banks and NBFCs. In fact, for Muthoot Finance, if you look at the gold loans, they comprise 98% of the company's overall assets under management, while for Manappuram and IIFL Finance, the figure stands at 50% and 21% respectively of the overall AUM. So, of course, we'll be watching out for whether or not something comes on that front. But, some of the losses that these stocks saw were paired but with the likes of Muthoot ending lower by 6.5%. At one point in time, the stock was down over 10%, but we did see some bit of pairing of losses there. Well, that was that then. Of course, it is a truncated week given the fact that tomorrow is a trading holiday, but nevertheless, TCS numbers are coming out and we will be reacting to it on Friday. And don't forget, tariff headlines keep coming, and the trade tensions between US and China are escalating. Any development on that front will be keenly watched out for. Of course, we'll be watching out for the US market open tonight as well. Tariffs have come into effect. How things pan out from here, Japanese officials and Korean officials are already in talks with US President Donald Trump. How things pan out on that front, the world will be watching, and of course our markets will also be reacting to that. But for now, we have managed to outperform our global peers. We have shown resilience ever since the tariff announcement came in. So let's see whether or not we manage to recover some of those the lost ground. 22,400 holds for now. But of course, as earnings also kick in, that's another thing that we will be reacting to on Friday. But with that, we are completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and I'll see you with the markets on Friday. Thank you. Thanks a lot for watching.